Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, firstly we're going to start with the Asian markets. They traded slightly mixed on Wednesday, as of course muted reaction to China's May trade data. But of course the energy sector got slightly a boost after the oil prices settled quite well above the $50 barrel. Of course on Tuesday that was the first time in nearly 11 months. The Nikkei 225 revised morning losses to trade 0.5% higher after the yen weakened against the dollar. The dollar-yen pair traded at 106.92 in late Asian trade, compared of course with the earlier session low of 106.7. In the session, of course, on Tuesday, the currency was trading at levels of 107.9. Chinese mainland markets traded lower, with the Shanghai Composite Index down 0.3% and the Shenzhen Composite Index off by 0.2%. In Hong Kong, the Hang Seng Index was down 0.3% as well. Also moving to the European stocks, they opened quite lower on Wednesday, as of course markets in Asia and the U.S. paired their overnight gains. The Pan-European STOXX 600 Index was down 0.5%. In other news, of course, the World Bank cuts its 2016 global growth forecast for Wednesday to 2.4% from 2.9% estimated in January. It, of course, cited sluggish growth in advanced economies, of course, stubbornly lower commodity prices, weak global trade, and, of course, diminishing capital flows as a reason for the revision. The dollar plummeted to a fresh 4-week through against a basket of major currencies on Wednesday, though better than expected Chinese import figures helped it climb off session lows. The euro rose about 0.2% to 1.1373. It had closed the last 2 days virtually flat after its 2% surge on Friday, as disappointing U.S. non-farm payrolls report that all but quashed expectations for the Federal Reserve's interest rate hike this month. The dollar got smaller lift off overnight after, of course, revised figures on U.S. productivity and labor cost in the first quarter supported the view that the labor market slack is being gradually reduced. Elsewhere, of course, in Europe, the expectations of whether Britain will vote to remain in the European Union at the referendum on June 23 continued to sway the pound. Sterling was steady, of course, at 1.4551 after having gained roughly 0.8% overnight, as two polls gave a narrow lead to the ramp camp. Gold in the commodity sector touched a fresh 2-week high on Wednesday, as the possibility of an early interest rate hike appeared to dim following dovish comments by the Federal Reserve Chair Janet Yellen early in the week. Tracking its spot price, of course, gold was slightly higher at 0.4% to 1248.30 an ounce in late Asian session, as it hits a high of 1249.20 earlier in the session. That was its strongest since May 24. Oil in the energy sector prices rose for a third date, their highest in about 8 months on Wednesday, helped by industry rate data that showed a larger than expected drawdown in U.S. crude inventories. Worries about attacks on Nigeria's oil industry and, of course, strong Chinese demand in U.S. helped to deliver up 17 cents at $50.53 barrels, after, of course, touching 50.58 earlier, the strongest since October 9. U.S. commercial crude inventories fell by 3.6 million barrels last week. That was a data that was delivered by the industry group, the American Petroleum Institute. That was showed on Tuesday after, of course, the market sentiment compared with an expectations for about 2.7 million barrels draw. The U.S. Energy Information Administration later in the day will issue an official inventory number. That was going to be later in the U.S. session on Wednesday. That's pretty much the most important news for today. Thank you for being with us. I'll see you next time.